Good afternoon, everyone, and welcome to another Nacho Tuesday. And today I have Colin here with Eqvista. And without further ado, Colin, we'd love if you could introduce your company and tell us more about what you guys do over there.
Yeah. Hi, everybody. Hi, I'm Colin. I'm a partner at Eqvista. Um, so for Eqvista, actually, we are a cap table equity management provider. So we have a platform that provides a software that helps people manage their equity. And we also do company valuations. So we have kind of two main services that we provide. And been doing this since 2018, so around 5 years strong now. And I've kind of been in there since the beginning. So.
Nice. So how's growth been for you guys over the last few years?
Pretty good, actually. Yeah, the first like 1.5 years was all like kind of product development and kind of just getting a feel for everything, and kind of also working on the marketing as well. But then in like 2020, that's kind of when our services really started rolling over, and people started kind of signing up, and also we started doing the valuations as well. So it's just been kind of steady growth like year on year.
Nice. So what got you to where you're at in your career, running Eqvista over there? Tell us more about your career path.
Yeah, so it's kind of been like very kind of all over the place. Like actually, I'm from Minnesota. So I went, kind of lived my whole life in Minnesota. I actually went to the University of Minnesota as well for biology. But then I kind of realized that biology wasn't really my thing. Maybe a little bit too late, but I just couldn't really see myself kind of in the lab all the time or, doing a medical thing. So, and I was always interested to come to Asia. So actually, and then I moved over to Asia. I actually lived in Korea for a couple of years. Then I made my way over to Hong Kong. And
Wow.
then Hong Kong is kind of like a finance city. So I decided to actually study business over here. So I studied accounting and finance at the university here in Hong Kong. And then after I graduated, I looked for a job here. And eventually I kind of landed in a local CPA firm with my current boss, actually. And then so I was doing like audit work for a while. And then he decided to start Eqvista back in 2018. So I kind of helped him with that. And we kind of just been slowly growing it ever since.
That's as I say, that's a long way from
Yeah.
Minnesota.
Yeah. It's a lot different from Minnesota, too, over here.
Yeah, I love Hong Kong. I used to go out there a lot at a company where we manufacture over in Shenzhen. So
Oh, wow. Huh.
yeah, every time I'd go out to Shenzhen, I'd always stop by Hong Kong. So a lot of great memories there.
Yeah,
Um,
it's a really busy city.
oh yeah, I liken it to being the New York of Asia. So
Yeah, 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 yeah.
and I live in New York now, so
Oh,
so
wow. Okay.
a thing or two about that, I guess. I guess so. What trends do you see for company valuations in 2024?
Yeah, so 2024 is quite interesting, actually. I mean, like to give a really brief kind of history of the valuation, I guess, market the last couple of years. As people may or might not know, in like 2021, it kind of hit its peak. So it was like kind of ramping up for the years before that. In 2021, like the valuations were really, really high. We saw really, really high multiples, and then that's kind of come back down to earth like in 2022 and 2023. And then it's kind of a little bit of a low point, but I feel that next year, and kind of we've seen with some of the companies that we deal with, that it will kind of come back up in 2024. I think the interest rates will go down naturally. I think there's a lot of kind of dry powder right now in the VC market that they want to invest it, but it's just not the right time to do it. And they're kind of just scouting right now. So we believe that in the next kind of in 2024 that it won't kind of explode, but I think that there'll be a lot more money going in, and I think naturally the valuations will rise more, the multiples will rise, and then kind of, there'll be a lot more companies getting funding basically next year.
Definitely. How do you properly add a valuation to a company? You don't just like throw a number against, like throw a dart against the board, do you?
Mhm. Yeah, so it's kind of like it kind of depends also what type of valuation we're doing. So I mean, like our main valuation that we're doing is a 409A valuation, and for people who don't know, that's more on the compliance side for ESOP plans, for like employee stock option plans. So if you do have an employee stock option pool, if you are issuing equity to your company, to like your staff, that you need to get a 409A valuation done to kind of set the strike price, like the lowest end of the strike price. So in that case, I mean, we still do the traditional methods like a income approach, market approach, and asset-based approach, but it's usually really conservative. Usually, like the last 12 months of revenue that you've done or a profit that you've done. And then another type of valuation that's more forward-looking. So as you know, like startups are growing, like they're maybe doubling or tripling every year. So a lot of the times, like, we might also, if they're growing so much, we might also use the next 12 months of data, like what their forecast is. But we'll usually use like a discount cash flow, like what is their forecast in the next 3 to 5 years. Also with market multiples, so we'll look at like public companies, also M&A transactions, and try to find like a suitable multiple for your sales. So we use those two main methods actually. And then for other companies, which they've been like funded, like a lot of the Silicon Valley backed companies, the 409A will actually use the pre-money that they have, but then use a specific model to kind of make it more on the 409A tax side. So.
Very nice. Where do you see software valuations? You guys probably deal with a lot of software companies, I would assume.
Yeah, so software, it's really depends. I mean, like usually software valuations, like the multiples are really high, but it
Mhm.
also depends on what type of kind of software it is. Like if it's biotech, med tech, if it's like security, gaming, even like crypto, or nowadays it's like AI, right?
Yeah,
You know,
heard
like
that.
some of those, yeah, like those multiples can be really, really high, and also the forecasts are really, really high as well. So, like I think the trends is like, at least I know that a lot of VCs are kind of targeting AI companies. So in terms of like when they do their forecasting, I think that you can hit that scale, with AI, but a lot of other companies, even their software, they can't scale that fast.
Great.
So that, I mean, like, in terms of the valuation, the forecast drives most of the value because that's kind of, what you expect your discounted cash flow to be.
Yep.
So it kind of depends on like what's your business model, what industry you're in, even in different types of tech, and then like how does that translate to your forecast, and then how the valuer sees it or how the investors see that for what is like your value of the company.
Good point. I guess what tips would you offer for companies out there looking to prepare for fundraising, especially if 2024 might be a little bit, maybe a little bit easier time to raise money as opposed to some of the last few years?
Yeah, so I mean, like it's interesting because like with the foreign and A evaluations that we do, we kind of see like the kind of the information on the funding round like 3 months after it happens. So we still see a lot of the data that's going on, but it's just kind of like after the event happens, basically. So I mean, like what we see a lot of the times of the companies that do get funding compared to our clients that are looking for funding or haven't gotten, or like their business model is not to kind of get funding every 2 or 3 years.
Mhm.
It's kind of like the data room that they have is really well organized. So they have lots of details for their pitch deck. They have their financials. They have their historicals. They have, management team. They have a summary, like Snapchat. They have like all these documents. It's really well organized. And when you read it, you can kind of, exactly when you look at it, like what you're looking at. It's not, especially for the pitch deck, right?
Yeah.
Even for us, like sometimes we're doing an evaluation and we don't really understand what the company does or how they can like generate business. Especially if it's like a pre-revenue company, so I mean, that's for us. It's like you need to make sure that anybody looking at your pitch deck knows exactly what you're doing. What is your business? What's the problem? And they can see the potential as well. Um, so that's kind of like a big thing. But I would say from at least from our perspective for the valuation side is a lot of the companies, especially if they haven't gotten funding before, they have no experience with it. They'll try to shoot for a really, really high valuation.
Yeah.
But if it's unrealistically high, I mean, the whole point is that they don't want to give it too much equity when they do fundraise.
Yeah.
But if it's unrealistically high, then actually it hurts you more than it helps you because the investors will be like, that's too ridiculous.
Yep.
I mean, like we have some companies, like they may even be pre-revenue, but they're trying to shoot for like 50, $100 million like pre-money. We're like, that's like,
Jeez.
we won't, we just do the calculations basically. We won't tell them like we don't believe it, but what we think is like that's really, really high. I don't think an investor would accept that.
Yeah.
So it's kind of like you need to make it, you need to make a sacrifice. Like if you really want to get funding, you shouldn't put it, that high. Um, and then the other kind of trend that we've seen is, especially these days, is a lot more like safe note financing rather than a funding round.
Yep.
So I know like a funding round is like kind of sexier because you have like a share price and it's a little bit different. But I would say that for companies who are looking for funding, especially for like pre-seed companies, that the most common these days is like a safe. Uh,
Yep.
so they should kind of target this, that they really want to secure some money from kind of VCs or angel investors.
Definitely. And for and for anybody that doesn't know what a safe is, if there's anybody out there that doesn't actually know, can you maybe explain to the audience what a safe note is and why it's so popular these days?
Yeah, so a safe note, like safe SAFE is simple agreement for future equity. So it's basically, it's not really like a loan, but I guess it's the closest thing kind of. It's like a convertible note. I mean, but you wouldn't be paid back to the investors. And that this amount of money will convert in the future to equity.
Yep.
So the benefit of this is that you're not really setting a price or like a valuation on the company right now. Because for a lot of the companies, one, you don't really know how much they're valued, and even if you do, the startup will think different number compared to the investor.
Yep.
So I mean, you might have a cap on it, like a pre-money valuation cap, but you don't set the pre-money at the time of funding. And then once you have a price round later, usually, or a liquidity event, usually that's when that amount of money will convert to stock.
Yep.
So, and whoever invests early in the company, they have really nice terms. So once they do convert with other investors, they might get a big discount on that.
Mhm.
So you're getting a lot of money, and you don't have to negotiate about the pre-money, because that's a really big kind
Yeah.
of point of contention, especially with the fundraising kind of events. Yeah.
Yeah. What else do investors look for, I guess, when choosing to decide if they're going to invest into a company or not?
Yeah, I would say that from the companies that we've seen, a lot of it, especially if it's like pre-revenue, a big part of it is like the team,
Yeah.
and then how you communicate that, like how experienced your team is, or how much expertise they have, or if they do have experience with other startups, either if they maybe even better if they've exited. But what we've seen is like you can have a company where even the idea or the product isn't there. They might not even have an MVP, like minimum viable product. So they don't really have a working product, but the team is so strong and they've exited many companies before, and investors will just throw money at them. So even, for the companies that might not have that experience, at least you can maybe show in your pitch deck what experience you do have, or
Mhm.
how, you can show more confidence that you know what you're doing, or that you can work really hard to build the company. And then I guess depending on which industry you're in, kind of convincing the investor that you can scale, that what you really put there that you can achieve,
Mhm.
um, and then I mean, especially like with AI, it obviously can scale really high, but
Yeah.
some other companies like how you can really scale that up.
Mhm.
So I think that'd be something that that we see at least.
And how do you really differentiate there in a sea of other AI tools that are out there and coming out day by day?
Yeah, that's really hard. There's a lot of AI tools coming out these days.
Yep.
Yeah, I mean, that side I don't really know, especially like if you're comparing a bunch of different AI companies. But I think in that, I mean, for that respect, it would just basically be like how well you can pitch it, how well you can communicate that you're really different, um, and that that you can basically scale, or that people really pay for it, basically, what you're selling.
Yeah, I was having a conversation with somebody the other day about this. We felt like a lot of AI companies are kind of more of like a feature as opposed to like an actual business that you could actually
Hmm.
build around it. Obviously, a lot of people are using OpenAI and other off the shelf tools and whatnot. But yeah, a lot of them seem to be more features than actual businesses. A feature that like maybe an incumbent business could just launch and kill this new startup, if you will.
Yeah, I mean, you kind of have to. Yeah, I think we've seen that as well. It's a lot of it's like if you're big enough, you could actually kind of recreate that yourself if you wanted to.
Yeah,
Um, so it's like kind of how do you make it big enough, kind of for people to want to back, basically.
definitely. I guess what causes most startups to fail, in your opinion?
Yeah, that's a really good question. I would say that, I mean, for a lot of the companies that we've seen, like the differences between the ones that do well and the ones that don't, and then end up kind of they don't have enough money to kind of continue to get going, is
Mhm.
that they might have a really good idea for the product, but they didn't really find a good product market fit. Um, and that's kind of where they spend a lot of money on developing it, and they have a really high kind of burn rate, or how much money they're spending per month, but the market doesn't really accept what they're selling, and they just can't get that revenue kind of growth going like that.
Yeah.
um, so a lot of it, I mean, like we've seen companies where it's like really, it's like med tech or biotech, or some other type of tech company where it could be a really good idea, but the market is maybe it's just not ready for it, and
Yeah.
they haven't really slowly moved into that yet. um, and then and that's the funded companies.
Mhm.
um, I think for the kind of the smaller ones or the other startups, it's like usually around year 2 or year 3 is when you can really see if it's going to kind of keep going or not.
Yep.
And for them, it's just like, I mean, for what we've seen is just persistence, how you can keep going. And if you can really grind it out for like at least 4 years, if you can, then you can slowly get gains. You can kind of slowly grow, either from like, 50K to 100K in revenue and then just slowly build it up. Then you can kind of, I think for 2024, the shift has been rather than growth to profitability. So it's like, how can you sustain a profitable business to keep going? Because a lot of the companies, they just try to get growth and they just burned out basically because they just didn't have enough money for investors to keep backing them.
Yep. And do you think we'll get back into that, that growth focus again, where, maybe profitability doesn't matter as much? I'm definitely in the profitability bandwagon. So I see that kind of return as the norm. But do you think we'll kind of get back to this growth at all costs trends that we've seen in prior years?
I think compared to 2021, probably not. It depends on which industry. I think for AI, probably. I think the investors would be willing to pour money into a company that they think can scale that fast, right? And they're just waiting to kind of get the market. But for a lot of the other companies, I think that the investors want to see some progress, especially in terms of profitability after a couple of years, right? I don't think they can wait that long. Like we've seen some companies where they've had tens of millions of dollars in funding, but they just keep having down rounds. And I think that's quite common, especially from if people kind of raised in 2021. But in that case, it's like you invested already, and you don't want to lose your initial investment, so you keep investing more money, or other investors are coming in.
Sunk cost.
Exactly right, or like they're getting a lot of because it's the share price keeps going down, so they're getting more equity compared to how much they invest in. So I think it'll shift back to profitability as the focus rather than growth.
It's good to see. So I know you guys deal with cap table management. We've discussed before, but what problems do you see arise from improper cap table management? What have you seen in the past, and what kind of problems does that lead to for companies?
Yeah, I mean, I think it's kind of twofold. One is that they have a cap table, but they just don't really update it. So in that case, like everything's really messy. I mean, like we've had companies where they want us to onboard onto onto our system, and they just have everything like in PDFs and not even or Excel, but they have like a bunch of different versions of it. So we have to kind of sift through all the data to see what is the most correct version, and then put it on there. And that's, I mean, for them, they just nothing is updated. So even all of the shareholders don't really know what they own, or the company doesn't really know, who owns what basically. And then I think the other side is for filings. Like I guess a good equity management system, it can kind of tell you what filings you need to do, or what filings maybe that you didn't know about that you could file, and it could give you an advantage in terms of maybe taxation wise. Like one example is there's a filing called 83B, which is like early election for tax filings. But a lot of a lot of the founders, I mean, if they are, kind of really inside the kind of the startup ecosystem and they talk to a lot of other people, they know about it. But a lot of them, especially for new founders, they don't know anything about it. So it's a way to basically prepay tax and kind of set the price in terms of the eyes of the IRS. Before your company grows. So I think with a cap table system, you can know about all of these like filings that you might not know about, and it's kind of streamlined in the system. So you can kind of do it all there. You don't have to worry about it, or you don't have to take hours to do it outside the system. So it's kind of like a nice benefit. It's like one is organization, and then the other side is like just doing lots of filings that would be too tedious to do otherwise.
And the 83B is, really important because you don't want to get a tax bill for some projected value that it's not actually really worth.
Yeah. And in terms of us go ahead.
Oh, go ahead. Sorry.
Oh no, in terms of us also for the 409A, like once we finish, we'll put the details inside. So then it will update the system and update the shareholders as well, like what is the new fair market value. So it's also good for like a communication tool to tell your shareholders that you're really caring about the equity side, and you're updating it regularly, so they feel like they're that everything's kind of like really important in terms of the equity side.
Perfect. I guess what else should people know about what's next for Eqvista over the next few years that you'd like to share with us?
Yeah, I mean, like we're growing quite well. We keep trying to add more features to the cap table system. We want to add a big feature which kind of makes it more like real time. So it's kind of you can input some data, then we'll do some kind of checks on it, but then it will kind of be logged onto the platform, and you won't have to do it so manually through an analyst. Now, obviously, a lot of our clients they like to have the personal touch, where you're talking with an analyst and they're doing it for you.
Yeah.
But we kind of want to do it more in the middle, so it's easier for them. They don't have to wait so long, and then it will kind of update. If you just change some of the inputs, it might update every month or every quarter. So we think that rather than doing it annually, if you're updating it every quarter, you kind of feel more that it's kind of a true reflection of the value. So that's kind of a big thing that we're doing now. And then we want to kind of just keep expanding the platform so we can add more features, more tax compliance, and then also kind of more on the valuation side as well.
Nice. I guess anything you'd like our customers at NachoNacho to know about your platform and why they should pick you guys over the other platforms that they might have heard of out there?
Yeah, so I mean, like the cap table kind of market is a lot smaller. It's kind of more a niche market compared to other like SaaS kind of markets. But I would say that kind of for Eqvista compared to others, that we for the system it does pretty well. It kind of does all the main things that you would need in a system, and it's kind of streams on everything. So it's not. I mean, the interface and kind of the UI UX is quite user friendly. You don't have to when you look at it, you kind of know exactly where to go, where to click on. You don't have to spend hours and hours trying to figure out how the system works, or look at different guides. Read guides about how that works. So that's kind of nice on the platform side. And then the kind of the touch that we do with our clients in terms of valuation side is that we really try to work with them to kind of get the highest quality for them. So then they feel like they're being taken care of and that we're, doing the valuation the proper way. We handle quite a lot of valuations. We want to keep going that in the future, but we want to, hire enough staff where our clients also feel like that they're being taken care of. So I know that with some of our other competitors that like they come over to us from them, they feel like they don't really get back to them at all or like answer their questions really well. Like we will try to respond to a client within 1 to 2 days, but they say like they don't really get a response from them. So we try to, we might be smaller than some of our competitors, but we try to do that more on the personal side where they really feel like they're being taken care of.
Yeah, it's a serious business too. Managing your cap table. Managing your company valuations. It's not like trying to figure out an email marketing tool where if you don't figure out a particular feature, you could still get that email out and it's everything's gravy. But yeah, it's cap table management's actually very important.
Yeah, and I think that like in the world of automation, of course, a lot of the things will be automated, but people still feel they still want a personal touch for some of the things, right? Especially if it's more on a professional level, like for professional consulting services.
Yep.
So, some of the calculation side, but in terms of when you can talk to somebody, if you have any concerns, if you want to have this changed or this updated, you feel like you have somebody that's kind of just a step away that you can contact, and that they'll be able to kind of respond back to you.
So it's great to have. So I guess tell us maybe about a time that you failed and what you learned from it.
Yeah, so it was interesting actually. After I kind of studied kind of accounting again and got out, I went to interview at some like really large accounting firms, and even actually during my interview, I actually went pretty far, but I didn't kind of get to the final round. But my strategy was to kind of show my expertise in accounting because that's why I studied it. That's why I studied. A lot of the other candidates didn't really study that. But actually, now that I'm kind of on the other side now, because our company is like probably 20 to 30 staff, and because I'm kind of been here, I'm at the partner level that I'm interviewing a lot of people coming into the company.
Yep.
So I can kind of see now, like the place that I failed is I tried to kind of specialize in one thing too much and show that I was really good at that skill.
Mhm.
And now that I'm interviewing people, I actually prefer people who are more well-rounded and that they don't only kind of specialize in one thing. Even if they're really good at it, I would much rather have somebody who's really well-rounded and their personality is really kind of eager to learn. They're really kind of willing to accept kind of if they make mistakes, if they own up to it, and they just have like a really nice personality to work with because that's something I can teach I can teach them skills. I can work with them. They can work with the team. And
Yeah.
that's, I think, and as a startup as well, you want somebody, because like it changes day to day. Like
Yeah,
you
you
have
got to
so
wear
many
many
different things
hats.
flying in with flying at you, and
Yep.
it just everything is changing. And you need to kind of be like a jack of all trades. You need to know a little bit about everything and be willing to do that all, because the whole team is just shifting all the time.
Yep.
So it's like when I interview somebody, if I can see that they're kind of a little bit good at a lot of different things and they're really okay with doing all this stuff and they're really hardworking, to me, that's like the perfect candidate. So if I had to do it all again, I'd probably be a lot more like kind of well-rounded. But that's kind of just anybody who's who wants to join a startup and they're just kind of thinking of a strategy of how to go at it. It's just definitely like just be really nice, show that you're really hardworking and that you're like kind of you're knowledgeable about lots of different things in business or startups or something.
Yeah, it comes in really useful for startups. Like the Pareto principle, right? So, maybe you could spend 20% of the amount of time to understand 80% of a task at least.
Mm-hmm.
So you could, really get that broad experience and bring that to the table. But like you mentioned, it's the soft skills that really stand out, right? It's that eagerness
Mm-hmm.
to learn, the willingness to adapt, the willingness to put in the hard work. Because startups aren't a typical 9 to 5 where you just hang
Yeah.
up at 5 o'clock p.m. You're still doing late night calls even sometimes and doing whatever you have to do to grow the company, which is an exciting time to be involved in a company. So you kind of earn it.
Yeah, I mean, like for me, like the staff that I like is like they don't really think about it as work. It's just kind of like a job that, like not a job. I mean, like they think about like I just gotta do this and this and this, and like it doesn't really matter like the time I'm working. It's just like I have a client or somebody I'm talking to, and I want to just get it done, rather than like, oh, okay, it's 5 o'clock, I need to get off right now because
Yeah.
like and I'm that's kind of the end of the day. So it's just people who are really devoted to working there, and then as the company grows, obviously they're kind of elevated to a position that they couldn't get in such a large firm, and they don't feel like they're just kind of like a number in a company. They're kind of more, like kind of connected with it.
That's where maybe those more specialized roles come in to be useful. Just plug you into you're the cog in the wheel, so to speak, at a
Hmm.
very large company. But startups have their trade-offs too, of course, right? But yeah, I've done startups for many years. I love it, and you feel like you're not working a day in your life if you really like what you're doing. So
Hmm.
putting in those extra hours is never really that big of a deal.
Yeah, yeah. It's like as long as you enjoy it and you find people that really enjoy it as well, that
Yep.
you kind of just you're building something together, and that's really beautiful. Because once you see the results after, like a year or two, or you can kind of look back and be like, oh wow, that's really amazing that we could really do that, kind of like in that amount of time.
Yeah, there's a lot of purpose to it. It's you could look at something and say, I built that, I did it. As opposed to something that's already kind of existed for a while.
Yeah, and like and for for companies that are all in different kind of stages,
Yeah.
it's when you kind of compare yourself to others where they've maybe gotten a lot more money in funding or they're at a different kind of stage, it's interesting, but at the same time, it's just kind of just like keep doing what you're doing. If you keep working hard, and you keep trying, that after a certain period of time, something I think good will come. I think the startup world really kind of rewards like really hard work after a long time. If you're just really consistent and you can keep doing that for a really long time, then something usually will come.
Yep. Yeah, and you'll start to figure it out over time. So
Yeah,
it gets easier and easier every year.
yeah.
Well, Colin, I really appreciate you coming on today. I know it's really late over there in Hong Kong. I'm sure a lot of the audience wanted to hear about valuations too. It's kind of a hot topic this upcoming year, given interest
Mhm.
rates and the whole fundraising environment as a whole. So we really appreciate you coming on today and giving us more insights there. And anybody serious about cap table management or 409A valuations and having a great quality service to kind of walk you through the whole process, please check out Eqvista. Colin's company is available today in NachoNacho, the B2B SaaS marketplace. You can grab it for 20% lifetime discount right now, actually. So don't delay. Head over there and get your cap tables in order. Once again, Colin, really appreciate you coming on today, and thanks again.
Yeah, yeah. Thank you so much, Andy.